Yeah. So real quickly, any takeaways, guys? Takeaways regarding the bank statement program. Second, something that can be helpful. If no comments, at least a nod. Yeah, yeah, yeah. Talk to at least one business owner, guys. That's one extra deal for you. Okay. Um, yeah. So before we wrap it up, deal talk. Anyone has a deal right now that they're working on? Something unusual, something you could just share with the group.
No deals, but tax day today.
Yeah, it is true. Tax day today. Yep. Yep.
So no more excuses. They have to file.
So
Anyone working on a file? Go ahead.
With that talk, I am meeting my CPA this Friday to get the list of people who extended the tax filing and ask them to give a line of credit. So California line of credit programs are now upping to $50,000 as a minimum. It used to be $25,000. Now it's $50,000. So Remnant, Homebridge, Lone Star, and the Spring EQ, don't be worried, right? We have 4 different full doc options and 3 different non-QM options: Mega Capital, Quantic, and AM West. And starting this Monday, we are doing a non-delegated correspondent with AM West. Their names are showing on the loan sifter. So except the HELOC, we can do all of the non-QM products, which means I kept it for next week's meeting. But if you have a late payment on a mortgage, don't fold it yet. AM West is a solution for you. Rates a little higher. Compare Carrington Mortgage with AM West, then we can save another deal.
Awesome.
Ragnar, I have a question with the bank statement program.
Yeah.
I know you use that for a second mortgage, but and forgive me for the question, but
No, it's okay.
The use of the program, does it apply for purchases too? And what are the down payment requirements if going with, like, say, a bank statement program?
Yeah. So in general, bank statement programs can be utilized for purchase money, right? Purchase first. So and the guidelines are pretty much the same thing. And typically right now, and Peter, you could correct me if I'm wrong, but I know of now that there is a bank statement program with 10% down as the minimum, so 90% LTV.
Yes.
Yeah. Okay. Yeah. I don't think there's a 5 yet. I haven't seen that, but even 10% is relatively new. Usually it was like 20 to 15 for the longest time, but I don't know who it was or who it is, but there is a 10%.
It is ACC mortgage.
See, I'm
It's
sorry.
there are 2: Green Box Mortgage or Green Box Loans, and second is the ACC Mortgage.
Oh, okay. Yeah, I believe C. Didn't you have a bank statement?
I think the Lone Star also has it, but Lone Star's FICO has to be really, really great
Really
FICO
high.
for them to do it. Really,
So
really great.
Yeah, but if you have a 720 plus FICO score, Lone Star may be an option, but they require higher reserve, higher credit scores. But it's a workable option.
Awesome, thank you. I mean,
the other 2 we need to broker.
so now it's a good time to flip the coin, right? So if they already filed and their taxes don't look pretty, back to the bank statement program, because before it was like, don't file yet, let us find other options. But now if they already filed and they're not happy with their tax returns, now it's time to flip it to bank statements.
Yeah.
Good point.
Yes. Yeah, the message of bank statement programs and non-QM is still relatively new in the marketplace, like the past couple of years. It's been around since like 2014, non-QM, but loan officers are now recently, the past few years, been really pitching it. Obviously with the volume shrinking, but yeah, if it's something you haven't been doing, it's something you should be doing, like yesterday. I don't. The one thing I don't like about Newfi is we're brokered there, but they've got phenomenal rates too. And there's other lenders too, but yeah, definitely, consider pricing them out in Loan Sifter, right? Under what is that? Non-traditional, I think. Under but they have really good rates too now.
Yeah, no, for me, DSCR and bank statement is completely new. I was with an A-paper lender, so everything had to be black and white. So I was just like, how, right? Like, how do they do this?
It's what it is. It's they look at the deposits, and then they do an average of 12 months or 24 months. And they assign an expense factor. Usually, it's defaulted to 40% or 50%. But with a CPA letter, the CPA can write, and say, hey, 20% or 10% even is customary for this line of business, and you can just use a 10%, expense factor. It's crazy.
And they'll take their word for it.
Yeah, as long as it's on a CPA letterhead. So in that case, if it works, you're using 90% of all gross deposits, right?
That's amazing. That's stated income, basically.
Basically, yeah. Now they will do watch out for those deposits that are being deposited from like the borrower's like personal account or something, right? It does have to be legitimate deposits through the business.
Right. So they do qualify the deposit, so they don't just take the front page, right?
Right. Correct. Yes.
Yeah.
Yes.
Okay.
Awesome. Great question. Anyone else? Ian?
Roger, which one of those lenders that was mentioned that does DSCR that will allow a business to have an NSF?
Ooh.
Or
That's really granular. Peter or Brenda? NSF.
We are checking the loan scenario dashboard.
That's a good place to start.
We have late payment, but no NSF. Chi, can you run it and let us know later today?
There you go.
Okay. NSF is when you have a late payment on the bank statement or account, there are late penalty charges or negative balance charges, whichever one is coming first, either $25 to $35. If you scroll down, there is a separate sector. When you don't have an NSF, it's not there, but when you have it, it shows up. So
on that, I have a question. Since you guys are familiar with this bank statement program, I know there's a lot of businesses that pull great numbers in terms of deposits, but just as it comes in, it goes out. And that was one of the things that I've noticed in a lot of the prospects that have bank statement options. They're showing them to me because if I were the one qualifying, I would see obviously they outgo and in real time on the bank statement. So how is that looked when we say, oh yeah, it goes out, 90% goes out, but this industry only takes 25%, so what's your experience with that?
They don't look at what goes out. They only look at what comes in and the expense factor.
Okay.
Now, if there is Peter, maybe you can speak to this. I haven't had this. I'm just thinking like further, if there is a reoccurring debt, and even then we don't look into business debt. So, right, Peter? We don't look at reoccurring business debt. So, whether it's reported on the credit report or not. So they just look at incoming deposits.
Hey.
Depending on which investor. So for example, the NMSI, they micromanage everything because they want to sell it to multiple investors. But if you selectively go to like Arcom or Carrington, when we have one way, many different exceptions can be done. If you have a compensating factors, so if you have three great compensating factors, which are higher debt to income or the larger down payment or asset or reserve requirements, or third is the credit histories. Let's say you have had no late payment penalties for last 10 years, 11 years. We were able to get a LTV exception for on one bank statement file. It was kept at 65% cash out, but we were able to bring it up to 69%. Another file, we had a debt to income ratio that was above 50%, but we got an exception going up to 55%. So when the loan sifter doesn't show, just throw the scenario to Chi. she'll do the work for you. It will take about a day or two, but you will be receiving an Excel link with 17 to 40 different investors' responses. So the problem here is these investors are telling us, hey, why don't you send us a file? Just keep questioning the scenarios. We're not going to answer. So we've been blacklisted in some of the investors, but that's okay. We'll still, continuously opening up new channels or, getting more exceptions as the funding volume goes up. So there's no such as not available. When it gets stuck, ask for a favor. Then there's always a compensating factor or counter approvals that coming out. So another file, bank statement that had a 6 months reserves, had a 620 FICO score. It was a no-go. But the guy Carrington told me, if you bring in 24 months of reserves, then I'll save your file. What the heck? And we are doing another purchase.
So they're mad because they don't have the best pricing?
I'm
just joking.
I gotcha.
Yeah, I mean, I think different investors, different lenders have their own games, their favorite file. Yeah.
No, I was just saying, you put a scenario out there on the scenario inquiry sheet. I mean, everyone's gonna get it, right? So, but no one. I believe not every lender is gonna be able to be the right lender. So why would they? They just feel like we're sending scenarios and we're not sending deals. Is that what it is?
Yes. Like Home Express, for example, they're one of the best DSCR lenders. But because we are brokering the loans with them, I wouldn't recommend. There's another company named The Lender. This is like old time. There was a company named No Red Tape Mortgage.
Oh yeah, I've heard of them. Yeah.
Yes, this is like the longest and the oldest DSCR lender in the nations. So they have no DSCR ratio, rate starting at 5.125, but they don't give us the chance. It's because we have to broker, and everyone knows them. So if you Google search, that's why I don't like them. Is because my file gets stolen. But it's okay. It's okay. We are opening up new channels. Yeah. The many things are happening under the table. I didn't know how many people are writing 5-year prepayment penalty DSCRs, but there are tons. They're writing it.
Yeah, I mean, yeah, Freddie, we obviously have, I think the list is up to like the 70s now, but ton of different lenders. So if you're not going to get the income calculation from one lender, you have a plethora of others to consider. Anyone else? Any other questions? Deal Talk. Hopefully you guys, bring in some, even if it's a referral that you get, and what I want to encourage you guys is to share the deals and the referrals you get, files you're looking at, even if it's a no-go, just because it all helps each other, right? And it might be something that there might be something that you've missed. I'm going to see if it's okay, right? So on Saturday night, it was like 8:00, and I'm not complaining. C called me, and he just wanted to share a file that he recently got, and we were laughing about it because he's laughing right now if you can see him, because his credit report was atrocious. Like, talk about loving to spend money on credit, okay? Like, sorry if you're a spender, but this borrower it was like 38 pages long of credit reporting, right? Yeah, Harrison.
Between the two of them, they had over $300,000 in consumer debt.
Yeah, crazy, right? And that did not entail a mortgage. And so he's like, dude, I don't know how I'm going to qualify them. We're already at 50%. And this is no knock on C. It's Saturday night, guys, right? You've had a long day of family, friends, whatever, and you're looking at a file and you might have missed something. But we were reviewing it, and then we realized there was 2 installment loans that had less than 10 payments that the borrower or the loan officer could exclude. And so one was like, what was it, $473, I think, see, off the top of my head. And another one was like 181, I believe. And that put the ratios back in line, right? So that's we would like for this forum on Tuesdays to be that for you guys, right? To share even a small file, or not a small file, but a file that you might feel like, oh, I don't know if this is gonna work. I'm unsure of it. Bring it up because it's something for all of us to learn. Yeah, I too sometimes forget. Oh my goodness, I forgot that I can exclude this debt. And Gia would catch it or Brenda would catch it. I'm like, sweet, now we have a deal. Before I let you go, with that said, I did promise Ian. So last year I helped a young couple purchase a home in Los Angeles on a 1.3, and so what happened was this entailed gift funds, okay, and it was like 30% gift funds, but during escrow there was an issue. The parents were not able to get the amount of gift funds from China to America. Okay, so we were short about $150,000 of gift funds, or hold on, sorry, no, 75 of the 150. We were short 75. Okay, so on the note of amended tax returns, okay, now I am lucky with this one, I will say, and you'll understand why. But so this is their original tax returns 2023. Okay, you'll notice that they claimed 18,590 on taxes. Okay, we were like, the reason why this came up was because I've already vetted this customer out before pre-approval. They were approved with the said amount of gift funds of $150,000. And when we didn't get it, we were like, oh my goodness, can you draw, where else can you draw $75,000 from? Because without that 75, their DTI was pushed to like 53 or something like that, right? And I was freaking out. And we just went over everything, guys. They are W-2 earners, right? $185,000. Whoa, sorry guys. $185,000, and that's it. As you can see, it's a very simple file. So there wasn't much to get creative with here except for this. So we were going over everything. I mean, we were going over hourly pay, any bonuses, commissions, overtime. Hey, processing team, did we get eke out? Were we able to pinch out every single dollar on their monthly income? And it came to this, and I was like, hey guys, like, you know, $18,000, that's about what, $1,200 a month? And they're like, 1,200? And they said, no, we don't collect 1,200. And sure enough, it was like closer to $3,000 or $3,500. So as you see here, I connected them with my CPA. Okay, so my CPA was super happy. Okay, because I gave him a free a new client. And as you see here, this is an amended tax return. Okay, and you will notice that. Did I miss it? I know I missed it. There it is. That 18,000 is 37,000. Okay, so what happened here? So this one is to the question of, well, how did the underwriter accept this amended tax return? In some cases, they won't question it. What happened here? Well, what happened was they use a management company as indicated here, management fees of $1,970. Okay, what happened was the management company provided two separate 1099s, okay, splitting the 37,000 up, so 18 and 18, okay, to the clients. And their CPA, or so I think it was self-prepared, they only saw one. They only worked off of one. Okay, so that's why they claimed the 18,000. But after further reviewing it, there's two 1099s. It got amended. We had the income on the rental. Underwriter accepted it, understood the situation, and so that's a scenario where an underwriter did without really scrutinizing it, did accept
I was going to ask Ragnar, did they ask to back it up with leases or bank statements or deposits?
We were able to back it up. Okay, so with a 1099.
Got it.
And then
That's enough.
Yeah, with the 1099, and then we were able to provide it, and that's how we got that. Yeah.
It's awesome.
Yeah.
Yeah.
No, it was great. It was
Asking the right
fortunate.
questions, right?
Yeah, exactly. Yeah. All right.
Guys, if you have a couple minutes, I do have a question. I don't know if it helps the group, but it's something for me for a deal I was working on.
Yeah, sure. Awesome.
Okay, so as you guys know, obviously with the changes with the new administration, a lot of the programs that we thought that we were going to keep are not in place anymore, like IT and DACA and stuff like that. So I have a scenario where it's a really, really strong candidate to purchase. In fact, I've done a couple purchases for him in the past, commercial. He does not have a permanent resident card. He's not a DACA. He's just in the process of adjusting. So he has like a work permit and stuff. So for years, the business successfully ran for 20 years. It's been in the mom's name. And we have purchased everything under mom and everything. So against my advice, he went ahead and I think last year at the end of the 23 year, after we purchased a commercial building, he switched the ownership on everything to his name. So he filed taxes, with this corporation and stuff under his name. So he came up to me, at the beginning of this year, we wanted to look at another building. And I asked the CPA to send me the returns. To my surprise, he's 100% on everything. So while we thought that, there will still be some programs available, we're finding out that more and more things are kind of, lenders are kind of backing away from at least the last few programs that I could have available for him because, we've been able to do SBA stuff for them, home mortgages, but now he's 100% owner on the business, which he was in theory, but on paper, it was always his mom. So do you have any recommendations for somebody like him who is not a DACA, who is just in the process? He has credit, he has social, he has a work permit, but obviously he's not a foreign because he's lived in the States for almost 30 years.
The first thing I just want to ask the group, because this is what this whole time is for. Do you guys all know why this borrower is having issue with his employment as far as qualification goes? I just want to put that question out there for someone to answer. What is the issue right now with him, the son, having his name to the business? What eligibility guideline requirements is he going to face? Issue? Anyone?
His citizenship status.
Well, not the citizen right now, but as far as if his employment goes.
Well, because he's now 100% ownership, no?
Correct. But on that note, what's that issue that he's 100% ownership on, though?
I will give you
Thank
one
you.
more piece. So his corporation does pay him W-2 and K-1s, but still we have the main issue.
Yeah. But anyone know why, identify what the issue is concerning his employment now that he's self-employed and his name is 100% ownership to that business?
Maybe it was because of the mom. It was under her.
It's a guideline rule. There's a seasoning requirement. That's a hint.
Yeah, he's a year and a half into it now, 2 years basically.
Okay, so he does have that.
Yeah, 23 is when
Oh.
he made the changes. Yeah.
Oh, okay.
Yeah.
That's what I was getting at. I thought he just changed his name, and that's why.
No. He's been an employee within the company, like a GM, but mom had full ownership of the corporation for almost 20 years.
Uh-huh.
Then in 23, he, I guess, pride, took over, and he just wanted to have things on his name, and we're in this mess now.
Okay, gotcha. Yeah, I thought he just changed his name, so he wouldn't have the seasoning requirement of the 2 years as self-employed. That's where I was going to get at, but okay, that's not the issue.
But if we got to get technical, we still have a couple months left to get that 2 year mark. But but
Yeah.
we'll hit that this year.
That should be fine. There's usually exceptions to that.
Yeah.
Yeah.
So in someone, and his cash flow is amazing. He's got great reserves. I mean, he's been a property owner. He's got a couple buildings. So like things like SBA and stuff are out the door for him because obviously I don't have that citizenship or at least permanent residence requirement there. So I'm looking at different options for him because he's a strong buyer.
But he has his EAD.
Yeah, he has. So when, just for, I guess, for the benefit of the group, when somebody is in the process of adjusting status for whatever avenues they find, they're allowed to request an employment authorization card while in the process. It doesn't give them status, but it gives them authorization to work and a social security number.
Correct. That is correct. We don't have a non-QM that allows ITIN.